Hey everyone, AndroidFX here with a new YouTube video. I will be going into technicals in this one, so stay until the end to learn something new. In this specific video, I want to talk about supply and demand areas. What is supply and demand, how we can identify supply and demand, and how we can refine the areas to have the best entry opportunity. Supply and demand is a very important concept that I use in my trading, and one of the concepts that actually allowed me to make over $1 million in payouts and being funded with $6.7 million. My trading style has been very simple. My charts are very clean, as you're about to see, and supply and demand is one of the concepts that I mainly use in order to identify if price wants to go up or down. So we're gonna go on the charts. The entire video is gonna be on the charts, and I'm gonna share to you guys exactly how I use supply and demand. And trust me, after you watch this video, you're not gonna need to watch another tutorial about supply and demand. So let's get into it. Alright guys, so I will be using the EURUSD chart because EURUSD is my favorite pair and the pair that made me all this money. So I'm gonna stick to it, and I'm also gonna stick on the higher time frame. So a very important thing when trading is to not really go on the lower time frames. I mean, yeah, lower time frames are great if you wanna have 5 trades a day, but trading that much will not really make you profitable. There's only a few good traders that can trade the lower time frames consistently and they can be profitable with it. I'd rather stick to the higher time frames, take 1-2 setups a week and be very good with it. I'll show you an example. EURUSD, using the concepts that I teach in my private community and also freely here on YouTube. We had this EURUSD buy right here which went for a 1-2, and we just risked 1% of those profits to re-enter another EU trade, which right now is going pretty well in profit towards take profit 1, just by using, you see here we have an imbalance, here another imbalance, but if we extend this area, that's also a demand area. So let's go back on the fresh chart and talk about supply and demand. So what is supply and demand? Let's take Gann retracement, right? So we have price going up here and then going down here and then basically doing all sort of stuff, right? In order to understand supply and demand, which by the way is a basic concept of economy, right? When you have a lot of supply, then pricing is going down. Obviously, if you have a lot of demand, so there's demand for a certain product, the price also goes up. That's the basis of economy in the world. If there's only 10 apples in the whole world, obviously the price for one single apple is going to be extraordinary. But if there's millions of apples, obviously the price goes down because there's a lot of supply to meet the the equal demand. So same thing happens in the markets. We have price is going up, price is going down, price is ranging, and that's mainly because of supply and demand, right? When there's a lot of need for a certain currency, it goes up. When there's a lot of supply of that currency, it goes down. That's just a very, broad statement. But I don't want to go into technicals that way because in my opinion, it's very confusing. So I'll just take 2 examples on the chart. Supply and demand areas, or, zones, trading zones, whatever you want to call them, they usually get marked when we have an impulse move. So let's take, for example, price is ranging, creating a range, and then it has an impulse move to the upside. I like to mark this area right here, and that's gonna be called the demand area, right? Where price created a range, it moved to the upside, created a demand area where price usually returns to mitigate and then continue in the direction. So then you may have something like this. Price is also creating range, impulse move to the downside, creating a supply area right here, coming back to it and then continue. So there's 2 ways to mark these areas. One of them is, as I said, in identifying the small range that's being formed before an impulse move, whether it's to the upside or to the downside. So we have the same examples. We have demand area, creates a range before the impulse move to the upside. We have supply area, creating a range before the impulse move to the downside. But there's also some areas that are very, very effective and that I teach in my community, which I like to call the flip zones. So they're not exactly supply and demand areas, but there's small areas before a break of structure. But we'll go into that later in the video. Basically, this is the easiest way to mark. You're gonna see a lot of videos where people try to really find that one candle that represents the supply and demand, that price is gonna hit and is gonna explode to the other direction, that is gonna give you the sniper entry. But I don't really believe in that. I believe in marking the general area because you always need to have confirmation before entering a trade. So it doesn't matter if my area is a bigger area or it's a smaller area. All that matters is that I have an area where I want to take a trade from. Because another important thing that I learned over 7 years of trading is that timing is more important than the actual area where you want to trade from. So it doesn't matter where it comes, it matters when it comes, and then you can identify the zone, confluence them together, add some more things, and take a very good profitable trade. But another way of marking is usually by identifying the last opposite candle before the move up. So if we have a range right here, that usually means there's one last bearish candle being formed before price moves to the upside. I know this is some ugly drawing, but bear with me. So usually, you know, we take the last, in this case, if price is moving up and it creates a demand zone, we take the last bearish candle before the move up. And I'll show you guys some examples right now. For supply and demand areas, I like to mark them on the 4-hour time frame and 1-hour time frame. I don't like to go down on the 50 minute. That's how I mark my areas, 4-hour and 1 hour. So let's just take 1 hour for example and see you know, some recent price action. And we can already see some, you know, nice areas. You see here we have a range being formed, right? Price is ranging before a move up, which creates a break of structure. So that whole area is creating a demand zone in price where you can buy at a discount price. And you can see price actually moved up after, you know, retesting that area multiple times. But this is a very, you know, wide area. It's very hard to mark it like that. So you can refine it a little bit. If we take the last bearish candle before the move, we have the bearish candle right here. If we take that candle, then obviously my area is gonna be way smaller, but as you can see, price never hit that. So there's multiple ways. You can also mark the previous 2 bearish candles, gives you a bigger area. So that's what I was saying before. It doesn't really matter if the area is big or you refine it to be as small as possible to take that perfect entry. What matters is having the general area where price wants to trade from, and then obviously identifying some confluences to that. Let's take another example here. We had a bearish move, a big move to the downside, which you see there's some small candles right here which ranged before the move down. So if we mark that area, that's gonna be a supply zone, and you can see price came into it and then just kind of played around. And this is where you need to wait for confirmation, right? You need to wait for a change in order flow, price to go bearish again, confirmation, you know, maybe a break of structure, change of character, coming with a Fib retracement, good timing in price, because you see it just invalidated that area. But where did it go to? And this is gonna be, you know, another thing about supply and demand, how we can select the correct areas. If you move higher here, you can see actually even here, what did we have? We had a bearish strong move, so that creates a nice bullish candle before the move down, which is also supply area. What we have lower, price comes down, you see it creates another bearish move to the downside, it creates another supply area, another one right there. What we have after that, price again breaks aggressive to the downside. What does that create? It creates this range, which creates a supply area, right? We can either take the whole range or just take the last bullish candle to refine that. And if we move to the right, you can see where did price hit. It hit that supply area perfectly, right? It hit that last bullish candle before the move down perfectly with the wick before dropping down. So if you refine them, you have the possibility to take sniper entries, but you can see here you have multiple areas. We even had another supply area being formed right here because we had a range, a move down, right? So you have bunch of areas. Where do you trade from? Because if you just take sells at every supply area, you're gonna get stopped out multiple times, and that's not a good way to trade. That's why it's very important to create a trading plan, add confluences into it, and then trade based on that. Here's a very good tip that you can use in order to select the right supply and demand area to trade from. Always look for liquidity. If you add that confluence, that liquidity needs to be taken before hitting the supply and demand area, that's gonna refine, it's gonna leave you with the best areas to trade from basically. So let's take a look right here. At this supply area, we didn't have any liquidity being taken. Price just created a range, broke down, came back up. There's no liquidity here. There's no equal highs, and by liquidity again I mean equal highs, equal lows, trendline liquidity, daily highs, daily lows. That's basically the main liquidity that you can have. But you can also use prior supply and demand areas as liquidity for your next area. And then you can see price came here. Did we have any liquidity? Not really, right? We did form some sort of equal highs here, but I wouldn't really call that liquidity, and price didn't go and didn't respect that area, right? But why did it respect the higher area right here? Well, price respected that area because we actually had liquidity. So what do we have here? We have a lot of highs, which you can take them as a trendline liquidity, liquidity or equal highs. When I see a bunch of wicks, bunch of highs being formed, that's liquidity for me. And we formed another line of liquidity right here. You can see price tapping that area multiple times, creating liquidity, and then price spiked above liquidity into that area, and that gave a nice reaction. If you were to enter there, something like this, aim for the low, 1 to 2 risk reward, which is a very good risk reward, pretty textbook trade. Right here, do you have liquidity? Well, now we don't really have. You can see price reacted from this supply area actually. So that's a very good example because this literally just happened, right? This USD chart is from the beginning of the year, so it literally just happened. So you can see the concepts work live, not just back testing, right? I didn't find any perfect example. I just went on the charts and started looking for those areas. So we had a nice reaction there. Price then continued, respected that demand and pushed higher. If it pushes higher, we can expect reaction from the next supply areas, but again, we need to look for liquidity. So take for example this area. Did we have any liquidity? We did not. Price just moved down. There were some highs here, but nothing crazy. It didn't look like liquidity to me. So price didn't really react from there, but it did react from the higher area. And why? Because we had liquidity in the prior or previous supply area. That's what I said earlier. If you don't have equal highs, equal lows, trend line liquidity, or daily highs, daily lows, you can also take previous, supply or demand areas as liquidity. So in this case, my liquidity for this area was the area below this supply area right there. So that acted as liquidity. Price came into the higher time frame, supply right there, the highs 1.043, and you can see how nice it reacted from it. So again, you can try to trade that, aim for 1 to 2, get in and out, and then let the order flow and obviously the more complicated stuff which actually rules the market, right? We have Trump going into office, dollar bearish, and price action just moving to the upside, and this should also break to the upside a little bit more. It's pretty easy, right? We have another example here. We have multiple supply areas. I guess by now you understand how to mark them. So we have multiple supply areas right here. Mark this one as well, a little bit of range. We had another one right here, and that's basically it, right? Every supply area that formed because we had an aggressive move to the upside. So let's take the areas. First area, did we have any liquidity? Nope. So it didn't respect it. Next area, did we have liquidity? We did in the previous area. So that acted as liquidity for us for this area. As you can see, we had a nice small reaction, but then some news came in and it pushed to the next supply area. So we invalidate those. Did this area have any liquidity? Well, we had the previous area again, which price exploded through, taking liquidity. So I guess we had liquidity in that area. So price did react. Obviously it came a little bit into this imbalance, so that's why I'm saying we can mark supply areas, demand areas wider, refine them, have multiple areas. There's a bunch of ways to do it. You need to find out what works for you. If we just take the last few candles, you can see price hit that area, and in this case we had liquidity right here. We had the previous supply area as added liquidity, so price reacted from there. It did give a nice confirmation, change of character on the lower time frames, and price moving to the downside. Again, we have multiple areas. We have another area here. You see price respected. Why did it respect? Because we did build liquidity here. Price going up, taking liquidity and then dropping very aggressive. And obviously this works on all the time frames. 4 hour, in my opinion, works the best because you can identify, just a few areas. You don't have to have multiple areas. You can see what we analyzed. It just goes down to, one area right here, one area right here where price reacted from, one area right here where price reacted from that did not have liquidity. And same thing to the downside right here. We had an area here, price reacted from, and if we just go and go, there's gonna be way too many examples that I can, put in just one video. So I wanted to create this quick guide about supply and demand to try to keep it simple. My way of educating and my purpose on this YouTube channel is to teach you guys the simple way to trade. You don't need to watch 100 hours of ICT. You don't need to understand all this complicated stuff, because usually the more you complicate it, the harder it gets to actually trade and be profitable. So what I like to do is always try to keep it simple. And my charts, I showed you guys my EU chart, very simple. We have some liquidity, we have some liquidity drawn, we have some areas being drawn, we have a fib, You know, even here you can see we had the demand area, V-shaped recovery right here with the break of structure, confirming my bias. We had the demand area, the 4-hour demand, the Fibonacci 0.7 retracement, all confluence to that trade, and it played out beautifully. And you can see now it also plays out, but this entry was a bit more aggressive. We didn't have a demand area, we had an imbalance after a break of structure, retesting the area, volume coming in, executing a nice trade with a trend. So hopefully that plays out. I guess when you watch this video, you're gonna know if EU did push to the upside. If it didn't, you're gonna take the loss and analyze what went wrong and obviously move on. So I hope you guys enjoyed this video about supply and demand. If you did, please subscribe to the channel, leave a like, put a comment down below if you do enjoy this type of content and what you want to see next. I'm trying to help a lot more beginner traders this year with free content, and if you guys wanna, you know, get mentored by me, by a real 7-figure trader with real results, real payouts, go in the link down below in the description box, tradingnfx.com. Join us. It's the cheapest membership you can have, with a ton of information, direct access to me, analysis, trades, everything you want. So again, thank you guys for watching, and I'll see you in the next one.